Hello, everyone. So, let us talk about the stock market. Let us try to make you some money. How are you going to make money in the stock market? You're going to make money in the stock market by simply following the following. First, don't forget, subscribe to my channel, like what you hear, because I think that you're going to like it. You're going to like it because one thing that this channel does that not many channels do is that I am trying to explain to you what is going on. Not selling you anything. I don't have sponsors. I don't have ads, right? All I'm here for is to make sure you understand what is happening. I am not trying to push my portfolios. I mean, if you go on CNBC, you go to all the other places, they are selling you something. It is not their fault that they're selling you something. The reason that they're selling you something is because this is entertainment. This is entertainment. This is not a course that you're taking with these people. They are trying to entertain you. They're entertaining you by telling you what you want to hear. What do you mean what you want to hear? Yeah, they're telling you, listen, this is simple what's happening. The market is going to collapse. Listen, this is simple what's happening. The market is going to go up. Listen, I'm going to make you money. I'm going to do this for you. I'm going to do that for you. It's entertainment. They are pleasing you. They are pleasing you. And remember, one way to make money in the stock market, it's very simple actually. You need to take advantage of it. Don't try to predict it. Try to take advantage of it. Let me see if you understand the difference. There is a difference. In addition to that, what you need to do is you need to understand what you're buying. Okay. Number 3, what you need to do is you need to make sure that when everybody is buying, you're selling. When everybody's selling, you're buying. What? That's right. You want to go where nowhere else is going. You want to be the first one there. You want to be the one that buys when everybody else is selling. Well, that's difficult. I know it's difficult. It's scary. Don't you think that Michael Burry in 2008, when he was betting against the financial crisis, and more importantly, he was betting against the mortgages, subprime mortgage. He was the first one to say, this is not going to last. They are going to lose. These people are not going to be able to afford their mortgages. These people are going to go bankrupt. What do you mean they're going to go bankrupt? What are you talking about? This is 2008. The stock market is up. House pricing is up. Why would it be any other way? Right? I know I was there. Okay? I work with these people. And I will tell you that one thing that they have in common is I thought the party would never end. But nobody would think for 1 second not to do it, because it makes total sense. It makes total sense for them at that time to keep the ball rolling, because the ball was rolling pretty good. Right? So you got to be careful. You got to know what it is that you're buying. You got to know what it is that you're buying, and you have to be the first one at the door, or you want to be the one that sells when everybody else is buying. Now, obviously, you're not going to be the first one, okay? But be amongst the first one. But don't come after the party is over. Like right now. Well, I guess, NVIDIA still has more to go. We should go for NVIDIA. Everybody else has left the party. It's over. The party's moving to something else. No, but there's AI and it's going to... Yeah, I'm not saying the company's going to go bankrupt, but it's over. I mean, this thing is that the P is huge. The valuation is enormous. Well, I know they lost a couple of percentages, but it's over. That's not how you're going to make the money. You want to make the money when everyone else is looking. So what's going on in the market? What's going on in the economy? Well, this video will take one side view, which is basically to say that I think that rates are going to come down. Big whoops, big surprise, right? I mean, the guy was there yesterday and he said it. He didn't say we're going to lower the rates. He never said that. What he did say was that if I found good reason to do it, then I will do it. What does that mean? So basically, if he sees that the economy is not slowing down too much, but more importantly, if inflation is under control, right, meaning going down more, then I will lower rates. Then I will. But everyone is expecting this already. Everybody knows that this is what's going to happen. They're already making bets before you even went pick up the phone or went on your trading vehicle and start trading against it. They already know all this. So what do? Well, I mean, this is probably what's going to happen. You know what else is happening? Well, because then you say, well, I mean, the money is running out of the S&P 500. That's correct. The money is running out of the S&P 500. So therefore, we shouldn't be investing in there because you know what? Let's do the rotation trade. That's right, the rotation trade. Let's put the money in small caps. Why? Well, because they haven't gone up as well. Well, there must be a reason why the small caps haven't moved, isn't it? Of course, when you listen to everyone else, they tell you, Tom Lee and company, 15% expected in August. I mean, he said a bunch of things to a bunch of people a bunch of times. Is that going to happen? It's too late. The fact that he's talking about it is too late. You don't want to be the one that talks. You don't want to be the one that comes after the party is gone. As soon as they open their mouth, it's too late. That's right. It's a little bit more complicated than you think it is. You want to be the first one at the door or the first one in. But you don't want to be the last one out when everybody's gone. So, one thing that is also happening, I mean, you may believe it or you may not believe it, depends what you're looking at. But when Dudley, the former Fed chair over in New York, says that you should be lowering the rates now because the economy is slowing down. And when I look at some of the pundit, DiMartino and company, I mean, what she's saying is basically that things are slowing down everywhere. So what does that mean? Well, it means that if you're going to go with small caps, I don't know if you're going to go for small caps. If you're going to go for small caps, what's going to happen? What's going to happen is you're going to be in the middle of a recession with a bunch of small, weak companies. Well, yeah, but they are going to have, we're going to have low rates. Yeah, but keep in mind that if you have low rates, what these people are going to tell you, they're going to tell you the reason you have low rates is because the economy is slowing down. No, it's not slowing down. The Fed says so. Usually, the Fed historically has been too late to react. They don't care. That's not their job. Meaning that they keep rates high too long until you have a recession. That's what happened in the 80s. The Fed is not here to keep your job. That's not their job, right? The Fed is not here to keep the economy going. That is not their job. The Fed is to protect the dollar, is to fight inflation. That is what they're here for. That's right. They're here to fight inflation, not to give you a job. They don't want to take it away from you, but they don't want to do that. So what do you think is going to happen? That's the question. But right now, everybody is looking at the rotation trade. I mean, it's too late. Right now, everybody is expecting rates to come down. It's too late. You need to be the one that's looking at what no one else is looking. And you know where they're not looking? They are not looking the low PE stocks. How do you know? Because the PE is low. And where they're not looking is they're not looking at the boring value company. How do you know that? Well, the PE is low, first of all, and these companies are growing. And they're not have a 3 trillion valuation. So no one is paying attention. You need to pay attention when no one else is paying attention. Look at my previous video. I have a bunch of stocks in there that basically are very good, of growth, and are small companies. But be careful. They are not the value. They are the small companies. So, I mean, some of them have value built into them. But what I mean by value stock, and I'll do a video on that, we're looking at companies that are large. They do boring stuff, but they do very important stuff. This is how our friend Berkshire made money. That's right. He bought BOV, he bought Apple, he bought Berkshire, obviously. He bought Facebook, right? Companies that he understands. I don't even think he bought Facebook, actually. You see, and that's the thing that people are missing from the market and from what they hear people saying. They want to be told what to do. They want to be told what's going to happen next. And this is not how you make money in life. You don't make money by following the others. In addition to that, I mean, if you look at the constant YouTube channels coming out with all that information, with all these people saying, "Ooh, look, we should be doing this, we should be doing that." But why would they tell you what to do? Right? They tell you, this is where the gold is. Go and get it. I know it. How come you're not getting it? No, but I am getting it. Because by you listening to me, you're going to be buying, like, if you're listening to Tom Lee, you're going to listen to what he's saying it should be done. And then, obviously, as you listen to what should be done, you're going to prop up his stock price. And then he's going to say, look, I made money. History is full of that. You need to understand that we really don't know what is driving the stock market. Right? It's a combination of many people work together. Unfortunately, people are focused on one thing. They are focused on one thing alone, which is the return. Look at some of the views that Tom Lee gets versus people at Spitznagel and his hedge fund people, right? A couple of thousand views versus 100,000. Well, because unfortunately, you don't really understand the stock market. You don't understand finance. You want to be told, well, can you just tell me what to do? And maybe I'll be, yeah, maybe it works. But it has to work every single time, every day. And that's not going to work every day. That's not how it is. You have to work for it. There is no free lunch. So therefore, it's entertainment. Right? It's entertainment. You could see them saying one thing and then they say another thing and then they bring this other person and this person thinks this is what's happening and they talk and forth and back and forth and back and forth. So if you look at all of the information that is being displayed at you, all that is coming out to you is exactly the opposite that Marcus Aurelius always says. And what he says basically is make up your own damn mind. You decide what's important. Think. Stop, get off the YouTube channel, get off the TV and think about, okay, what am I going to do? What's going on? What is going on? What do I want? Now, if you want to entertain yourself, then yes, you listen to all these things. But I will tell you, right now, rates are going to go down. And if they don't, then we have a major disaster because that means that the inflation is out of control. Rates are going to go down. There's going to be a rotation trade. S&P 500 is going to suffer for a while. And that's it. That's just one way to view it. So how do you play this market? Well, go for maybe value stocks. Maybe you go for the small caps, but be careful because if there is a recession, which people are saying is already happening, then you're gonna get hurt. Don't forget, as rates go down, the market tends to believe that, oops, this is not a good thing if rates go down, right? That means that we're in a recession. No, but we're not. We're doing it because we fought inflation. Inflation is under control, therefore we don't have to do anything. Fine. Then let's go this way. In addition to that, you need to realize that there's an election coming, right? You know that. And no one is talking about the debt. No one is talking about the debt, and they should be talking about the debt. Because the more debt we have, the worse it's going to be. Well, I'm not have to pay for it. No, in 10 years from now, there's no money for the, there's actually no money left for the retirement and for Medicare. I'm going to have to refinance it probably. We're going to have to do something, but that's how it is. I've been teaching finance forever. I've been in the market forever. I'm going to go back in real estate pretty soon. And what I've learned, like even in real estate, that the way you make money is you make money the dirty way. If it's too clean, you don't make any money. What do I mean by that? If people are telling you what to do, it's too clean, it's too easy, it's too simple, it's not going to work. So what do? You need to go dirty. The dirtier the house, the more work there is, the more you could charge, the less you pay, and the more money you make. Hey, I don't know if you know, but Donald Trump's father used to own a bunch of dilapidated building in Queens years and years ago. That's how he made his money. That's how he made his money. So you need to go for value. You need to go for value, and value is defined by its cash flow. Value is defined by what it is that they make. So basically, they're not that dependent on inflation, right? Meaning that if prices go up, then they will raise their prices. You want toilet paper, right? You're going to pay for toilet paper. That's right. That's right. So that's the type of company that you want. Not necessarily a toilet paper company, but you want a company that is required and that is important. So keep that in mind